it's basically comprised of like all my new ways that I like you newly have established and concluded are pretty damn awesome, or darn awesome, to dissect and like really in an enhanced way articulate the sort of like the sort of trading that traders had exhibited that comprises the whatever push and play is set up, and like really like dissecting the logic of that, like what it's a result of. However, the push and play is set up to continue pushing, like it's a result of a degree of imbalanced conviction with interacting with the market, with the prices the underlying products market is sat at a given moment, and the participants that are presently operating on this occasion have like that degree of interest, intent, conviction, and one-sided biased like like perceived value, like that what the perceived value is of the market of to interact with the prices the market set at right now, and how that exists like on this occasion, right? um and then ultimately how what that trend is of how participants are likely to then follow through with then interacting with the market in whatever way that they have been. And it's like that's like and then basically if they've like just continually traded it in the particular fashion, like as a here this push, right? Like of course you like you could, I mean, I wouldn't really look at it as one big one. You can get trapped a lot like that, to be honest, because like well, I'm not gonna, if I were to just not just show that I'm just speech spieling how you could get trapped in by looking at this as one big push and not looking at the actual structure of the in play at and pushes, and like when the push, like this was the push and play overs firstly, and it kind of showed signs here of that degree of imbalanced intent and conviction with trading with the underlying products market over 1 hour time period, primarily on the sell side. Like maybe he's decreasing in participants on this occasion, not being as convicted as what they were seen to once be, with the prices of the market sat at here. And then here they then like trade in this way, and then they like trade here, and then it kind of just resumes, and then blah 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 blah, and then the same thing happens, and then it resumes. But like this is the push that's in play now. Of course, it's sat amongst like a overall like push, but like this is the push that's in play. And yes, that push in play is poised to continue pushing, and what that's a result of is basically a strong degree of imbalanced interest and intent, and ultimately to follow through with and act on that like one-sided bias, like way that participants sway towards being inclined to primarily interact with like the market at this region. um and like they set the push up, they set this like run lower up as likely to continue, because it just, I mean, a push that's like waning and near and being done doesn't look like this. It usually like it'll probably have a push lower and then wake up, and then interest will start to wane, like, or it showed signs of not being as imbalanced at this region on this occasion, aka the participants on this occasion aren't as inclined to want to interact with one side of the market on this given occasion. And then like it'll like hit like a lull, maybe it's on the next bar, and then like off a lull of overall universal interest, meaning like the opposing side of the market hasn't been perceived as of value slash worth to interact predominantly with in a strong convicted manner, and neither is the side that's already on this occasion or happened to be the side that was primarily being interacted with. No longer is that existing as the side participants are most inclined to interact with. So there's like a lull, and then the next ball it'll print, and then or form like the next 1 hour time period, and then how participants are willing to trade like over 1 hour time periods up to this point, like like it can start to like a, a new trend will likely emerge. And it's like, I mean, one what the side of the market that was being interacted with most up to the point that like that's led to the market being sat where it is now is no longer at those prices anymore. And it's likely that like you'll basically see whether participants are willing to buy this region, for example, um and whether there's a strong inclination to do so, or for example, whether like a newly emerged like it resumes off participants still being inclined in this region. But it's like, yeah. Anyway, so I was really rambling there. But this would be the appropriate fib pull. It would. I think this is too much to ask for a push up to there, relative to how the market's actually set up, and I think that's just retarded placing it there. I also think it's a bit retarded placing it there when you've kind of got a clean like high here, and then also you got this, and it's likely that it does take hold straight away. To be honest, um, so yeah, I initially marked up the appropriate fib pull as wrong. To be honest, this is the appropriate one because I mean, look, you've even got some in like structure here and in there, but that's too small. You would want basically a push to here, and then based on the iffiness of the given day's direction playing out, you would just look for a 15M retrace to here, and then look for an ISIL QS, which it did happen because he has Frankfurt, and then push above, push above, push above, and then here is the bar that I executed on. For the standard strategy terms, it is sufficient enough to enter on this. Of course, it's not for when we discern the SCBC sat snug amongst an in-play out and push, but you can also see the interest decrease here too. Like, look at the wick rejections at the high of a sufficient kind of quantity to push to the upper side, and then this bar, where it's got like a larger top side wick, and then strong body close comprised of strong conviction, and then like it's not a sufficient and not like bar, like it's not a bar, it's not the degree of imbalanced intent which we would then look for, like the coin is it worthy of being a like 9 hour or 3 hour. Actually, to be honest, depending on how strongly convicted, if the 9 hour chart was set up like and then looking at this, to be honest, like if this was a 3 hour, um I, this would be very iffy. It would really depend on how the 3 hour set up, to be honest. um I mean, yeah, like on the 9 hour, like if the 9 hour was set up really good, and then the 3 hour would look like this, because like that's some signs of like possibly intent to trade with the market, or like the market auction, how that it's likely to exist as imbalanced regarding the intent at this region. Signs possibly showing it's like kind of not that good, because like it's still, I don't know, it's just a bit odd. But for standard strategy wise, under the conditions, it's fine. And then anyway, yeah, here's your high at hand. Go to the left, you see source price action, and then you got a clean zone, and it's very likely that this direction plays out, um, relative to the iffiness of the given directions of the given day's direction playing out. So that's what you place your SL amongst or relative to. Um, so um, what the? Okay, I'm gonna just. Yeah, I just had someone messages called Orlando. I was like, oh shit, because that's where I've been recently. And I was like, but no, he's in Andrew's channel. That's good. Um, you see, he was asking what my fib settings. That's yeah. Anyway, yeah. All right. So yeah, that's it. And then yeah, the appropriate 15M fib pull, in my opinion, was like of course relative to the 3 hour, 9 hour, and 10. To be honest, actually, like now that I'm looking, I would like. I mean, if I just go on this and then so yeah, so if you just go on to the 3 hour, if I just delete that, and then well, that's not 3 hour yet. So here, for now. So yeah, it is likely that it just takes hold off the bat with the price the market sat at. So 9 hour, let's have a look at that one more time, and then yeah. So this is what you call a SABC start snug amongst an in play out and push. Like this is something that you would really be like, oh shit. Like I'm surprised this lost, to be honest. But anyway, what I did also notice is on days like this when the market then runs above the high, um, like it's also pretty high probable that then goes in your favor, and you would probably be capitalizing on that based on your standard strategy anyway. So, like I said, it's just basically a derivative. So basically, like on the days where this does just run low and doesn't retrace, and what you would be probably looking for, because you don't get involved with standard strategy at the lows of a push, even though those prices are still poised to exist as heavily and be interpreted in a very heavily one-sided fashion. um, yeah, I'm just gonna be nice with this guy. Yeah, whatever. I mean, I'm nice with everyone, but like, yeah, 2 sec, bro. Making YouTube video. Um. So what was I saying? Yeah. The prices are poised to like be interpreted in a very imbalanced, biased way, and the degree of conviction that's likely to exist at this region is likely to be very one-sided. But you still don't get involved at the very lows. With standard strategy, you would want to see some sort of a retrace, and that retrace is relative to the appropriate fib ball relative to the 1 hour, also which is appropriate on the basis of the iffiness of the given day's bias playing out, right? So this is the 1 hour, but like for the 9 hour 3 hour thing, like 9 hour sufficient dynamic bar close set amongst the previous set and push that was in play that's then transitioned into the pause inside the market, which hasn't been interacted with for a sufficient period of time, then being heavily perceived as of value to do so in whichever way that is. Meaning the market prices at that region are perceived as very of value. That could be of sufficient counter quantity to the downside, then arcs out, and then the opposing side of the market, when the buy side is perceived as very of worth and participants are heavily imbalanced and inclined towards interacting with solely or predominantly that side of the market on this occasion, basically, point in time. Those participants on this occasion point in time. But to be honest, actually, yeah, I would probably mark up this. This is probably what it would be actually. Yes, and then you would have your stop because I mean, if you executed here, you probably would even be okay there, but it just looks a bit iffy. So you'd probably want to give it some room and maybe go about there. Um, so if you executed here, sell short, and then you visualized in your head you stop placed here, it could easily retrace up to here. And then also if you went short here, let me just move this chart a bit to the left. It's annoying is that. So if you executed short here, and then like you place your stop here, you could easily get tapped out. It just would be like you place your stop loss also on the iffiness of the given day's bias playing out, and then also like that intertwined with the like structure of the 15 minute, like basing your decision basically. Okay, yeah. Um, so I'll short here and then stop here, and it also like seeing whether your stop loss is in a point relative to also how traders have traded, like that's in a point within the um like 15M appropriate fib pulse range that's likely to be retraced to also, which is like decided on the basis of how the market's been trading like relative to 15 minute, and just basically logic. Like if you sell short here and you've got your stop here, I could still wake up. So it's like sell short here, which is what you would be doing, and what I did do, um and then you'll stop and then place, so sell short here, and then yeah, and then just go a bit above, so like give it a bit of room. So I would honestly say there's perfect, and then yeah, well, you see what happened, you got raped. But that was the given day's trade. So it would have looked like this. So you sell short here, and yeah, this does look good. I think that's a bit too small, shallow of a stop. Even this, you sell short there, you got your stop there. It's a bit iffy. I would honestly say, you got your stop, like so sell short there, and then you like maybe just put it a bit above. Like even this would be like a bit too much. You would just want to give it a decent bit, a decent chunk above, which is like that. That's enough, and then that's enough to basically be a good point to like accept that. Yeah, okay, that's market probably isn't likely to run straight off the bat. Meaning like traders like actual like the way they're willing to act with the price of water available as a seven isn't likely to take hold straight away. And anyway, yeah, that's what you would have been left with. So that's fine. This is completely okay. Yeah, that stop loss is probably perfect to be honest. Um, which you have to be able to say with things like this. It's like you deal with how the market's set up as of a key time period. This is it not like known to you. You deal with how it would be most appropriate to deal with the cards that you are dealt as of seven and or as of whatever time period you trade, and basically deal with them in whatever way would be most appropriate for you to deal with them like. Um, so yeah, you sell short there. It's very likely the market pushes lower. Um, and you sell short here. If your stop was there, I think that's a bit too shallow. Even here, I think that's a bit too shallow. I would just say a decent chunk above, about there even. So yeah, maybe to tick above, but still, it's basically the same thing in it. I'm just gonna, just for purposes in my head, like this, put it up one more there. So yeah, I think that's perfect. And then this is somewhat similar what we do with the Dow because we are also actually trading futures now. But I'm not going into that. That's enough for today. It's just basically daily S&P sat snug amongst an existing in play and push, which we are very picky and choosy with, defining what constitutes as the sort of intent to trade that makes up the bars formation as the S&P sat snug amongst an existing in play and push, or previous in play and push, which like one-sided, whichever side's what the market was being interacted with, which led to that push being the previous in play and push, then progressively becoming less imbalanced as what it once existed like as the market as interest starts to wane at the price of the market then got sat at. That could be to the upside, downside, both ways, which we assess neutrally, no bias, just for what it is. The facts, which is the price action, showing us the degree to which whatever intent is and conviction exists is imbalanced, and how that set the push up as like, and then basically then the opposing side of the market becomes attractive and of worth and perceived as of value, and then a strong imbalanced conviction unfolds at this region, which is like even best because like participants have showed that they've been tied with that side of the market, and then it transitioned into them newly like being inclined to trade with the opposing side of the market, which hasn't been interacted with for a long time too. So it's likely to be even more heavier and weighted slash imbalanced with that side. And then basically the next day you will look to get positioned in a sell short case above the opening price and above Asia high, and then you'll mark up the appropriate 15M fib pull, and then basically and then do the same thing as we done here, like where amongst the appropriate like 15M fib pull relative like to the how the market auction like on the 15 minute would be most appropriate a place to stop, and then and above Asia high and obviously above the open, and look to get positioned in the wick, and then look for a 1 to 2, and yeah, let's just say it's interesting. I mean, you can write down exactly what I said there and look at it, that what I've just said yourself, and let's see where I'm at on this chart. So yeah, you can just see you pause it. So they're also intertwined with weekly FEJs, so you're just getting a bit more context of what way or how strongly trades are trading like over daily time periods, what that pattern is with regard to how trades have been trading like over daily time periods exists like, in terms of how unbalanced certain side conviction is amongst like the prices what fall under being like the categorized as like the FEJ, right? FEJs. So you can see that here I'm on the daily, and I mean like just write that here. And that was like the first thing I rate. If I have anything else, I'll show you. But yeah, I've got a lot of data. Oh, okay, that's a pretty big thing. But just click it, and then you can screenshot it. And that's also awful writing. You'd want it black. Like no, fucking hell. What about that? Yeah. There we go. And you can actually see that. So yeah, I've got a lot of data. Well, a lot of I've done a lot of work with it. You can see that's what I've been busy with. It also works on the Nasdaq. It also works on the 60, aka euro dollar. So I could trade it on the see if I can. It works whatever. It works on the. I don't even know what to call it specifically. I mean, people call it. You could call it US 30. You could call it the Dow. You could call it YM, and then you could be using the CFD. It doesn't matter. It really doesn't matter. But it works on anything. It works on the bonds I've been looking at. It like the notes, same thing basically. I'm pretty sure, but to some degree, of course. Like with regard to how it moves, I'm looking at it on that gas. Actually, there's a trade present on this given day. In fact, um, with this, I'll show you. Um, so you've oh, bloody hell, that was easy for us to say, wasn't it? So it's like you you're being very picky and choosy with the sort of intent that makes up and you define as a SABC. Like it must have very good relative bias side wick, meaning like the side that the bar closes on, in this case bearish, so a very good top side wick, and then like for that degree to which imbalanced conviction remains as imbalanced as in what side of the market participants happen to sway towards most interacting with, like exists the same and as of imbalance basically. And the FVJs are just something that you get context with like, for example, is the market likely to just run through based on how the bars form, like, or but of course you don't even give a shit, like you don't get involved ultimately unless you see an SABC, right? So like, for example, here you get some good context because the market comes down sufficient kind of quantity push. You see how picky I was here, like on a zoomed out perspective, this bar looks like a good buy bar, basically, aka a good SBC sat snug amongst existing in play and push. But then if you go down a bit more, it's got too big of an upside top wig, and it's like not as like it's just something you would like where like conviction it just you know it came down, came up, and it's just it hasn't lasted as imbalanced up to then. It's just already kind of shown signs of possibly that degree to which interest and conviction existed as imbalanced, like slash as is may no longer be the case as of the prices what are available and point in time, and participants available participating at that point in time at those prices may tread with the same degree of imbalanced conviction, and you just want to be sure that yes, the next time period they are likely to tread with that degree of conviction, right? And so your ultimately sole focus is the daily with the in-play and pushes in the SABC stats amongst the um, existing in-play trend, like um, there's not really one here, I don't think. They are all like kind of setting up at the end of a push that's already kind of set up as. I mean, here is a existing in play trend, which then participants trade in a way that like adds to the existing in play trends push that sets it up as likely to continue pushing. Simply with how they traded, like, and then but like all of these balls are like coming after one side of the market had been favored, and then that side of the market being favored was less of interest, um, and perceived as more of worth to do so, um, any longer, and like then participants flipped towards wanting to interact with the opposing side of the market, and you can see that that's. I mean, here you kind of got that too. It's kind of like bottomed out after a push, but then like it's kind of just sat at the lows ish, and like one sec, I've been swayed. Everyone came in. Yeah, so it's like after one side the market's been favoured, and then like it kind of got traded to prices which then participants no longer began. Well, they began to show signs here within this week, that they may no longer be convicted, or be in possession of the same degree of imbalanced conviction, or have the same degree of imbalanced conviction, I should say, with the price of markets at this region and point in time. And then it begins to be sat at prices which like the way traders are perceiving those as of worth is beginning to kind of not be in the same sort of way as what they previously had. But I'm gonna kind of stop here. But anyway, yeah, this is the trade. So this bar sufficient anatomic bar close kind of amongst an existing newly emerged in play trend. And then what you do, which also you'd be obviously looking at like this, but I mean it's very easy to discern these like amongst the existing in play art and push. In this case, yeah, it is basically existing in play art and push. Um, and it's likely to just have follow through with that degree of imbalanced conviction. And then what you do is you drop down to the next time period. I'm pretty sure I've got the position tool marked. That's pretty cool. um, okay, so yes, it is working. um, so you then mark your chart up to the fifth to 7. Well, you would mark it up to 7, so it would be here. Um, and you would basically line up in your head. Well, first of all, you'd mark up the appropriate 59 fib pole, which in this case definitely wouldn't be that. It'd be this, I would say, because like you have to reconcile the fact that like the prices that are available right now are likely to be perceived as like of uh worth to interact with in a very one-sided way. So it's like you don't need some big fib pull. You just mark up the appropriate one relative to the iffiness of the bias play of the direction playing out. So um, in this case, it would be this, and then obviously you'd be entering above the Asia high, which is here, and obviously that's above the open, getting involved in the wick basically, and then the anticipatory wick. Anyway, because obviously you can't be sure when you get right down to it, but it's very likely that it is likely to be the case. And it is set to be the case. Whether you like it or not, whether it happens or doesn't, it's set to be the case. Anyway, um, if you enter here, if you've got your stop here, look amongst like the playable the 15M range, like the range of the appropriate fib pull. Would you want your stop there? It's like no, it's too confined and close to where you're entering at basically. Then if you look again, if you can use your head and draw an imaginary line above Asia High where you'd be entering at. If you entered then, had you stopped at the 70%, it's still a bit confined within the range, so give it a bit of room. I would just like to, what I then do from this point is just give it a chunk. So give it a nice healthy chunk. You, like maybe it's about that. Probably about that. Yeah, about there. So what do you know? It's the exact same place. And yeah, so that's the trade. How you would do it. But I'm just doing it on the Dow. So I'm just curious though on other markets. But like yeah, this is probably gonna work to be honest, but who knows? I mean it's already at a 1-to-1 I think. Oh no it's not, never mind. But yeah, it doesn't even matter if it was or wasn't because I'm using a 1-to-2 for this. But for 6E and 6B, you get a pound and euro futures. I would, I don't really know to be honest. I mean, there hasn't been many trades with it, but I like using 1-to-ones on these markets. I don't know what it is. Maybe it's because I mean, look, yeah, so it's fine, like it's profitable, but um what I'm gonna do is I'm gonna make a part 3. I'm just gonna go for a wee and get some more coffee at 2 sec.